class 1 of the EU Taxonomy Deep Dive under the Climate and Nature Risks Learning Path. My name is Kiara Bahet, and I am your course facilitator for this morning. Right. Just as a brief recap of the house rules, if we can ask our participants to mute their mics while our speaker is presenting, and that, however, having said that, we would like to request that you turn on your video cams as we like to see you interact with us. Also, if you have questions, um, our speaker would like you. It would be best that you ask our speaker directly, or if ever, if there are a lot of questions or a lot of you who would like to speak, just raise your hands and we will get to you. We will accommodate your question in due time. However, even if we do have a Q&A portion at the end of the session to make the discussions more lively, please don't hesitate to ask us directly or to ask the speaker directly your question. Right. Also, we will be having Slido questions, Slido polls during the presentation. So if you have your personal device, such as your phone, or if you can open your browser, if you it's best that you prepare that already by now, so that when we ask the Slido questions, when we project the Slido questions, you already have your personal devices ready. Right. Okay, so without further ado, I'd like to call on to the floor the course coordinator of this edition of the EU Taxonomy, Giorgio Falchi.
Thank you very much, Chiara. I saw many names that I have already seen. So I'm Giorgio Falchi, Research Associate at FBF for the people that I haven't met before. And today we are going to explore the GAR, so the Green Asset Ratio, which is a key part of the EU Taxonomy. And this training was, we decided to have this training about the taxonomy because even just the name of taxonomy tends to scare people on their application, how do they work, what do they imply, etc., etc. And especially we decided to have this live class, which does not require people to get into breakout rooms, but to have it more interactive with our expert Gabor Gyura. And as Chiara said, there will be Slido polls throughout the lesson. Feel free, of course, to write the question in the chat, or Gabor should interrupt himself and then reply to the questions throughout the live class. But let's jump straight to it. And I would like to introduce, first of all, Gabor Gyura, who's an international consultant supporting banks globally in managing their sustainability impacts in line with the UN's principle for responsible banking. Besides his current consultancy role, he had 15 years in financial services regulation in various positions and was founding head of the Sustainable Finance Department at the Central Bank of Hungary. Unlike us, he has a PhD in Earth Sciences, which turned out to be very useful in this situation. And with no further ado, Gabor, I will leave the floor to you and the lesson can start.
Thank you. Thank you, Giorgio, for the very kind, maybe too kind introduction. Good morning, everybody. Indeed, today we would like to talk about the green asset ratio. And I guess for some of you, you might know the GAR. Maybe some of you have even had some work activities around the GAR, but I guess for some of you, this might still be a new topic. So what I brought here today is more like a presentation in which we will, of course, quickly start by recapping what the GAR is, but I would rather a little bit reflect on the use cases of GAR, what could be basically the, let's say, economic or social functions of the green asset ratio for the European Union's economy. And indeed, as my colleagues have already mentioned, I brought some Slido polls as well. So let's try to make this session as interactive as possible. So the title I gave to the session is the Green Asset Ratio, one KPI to rule them all. Maybe some of you recognize this little reference to the Lord of the Rings. Actually, we have now several very good indicators to measure, let's say, sustainable finance performance. But one very promising and potentially very powerful and impactful indicator is, of course, the green asset ratio. So let's together try to find out, is it really impactful? Could it be even more impactful? That's what we would like to find out today together. And I already shared in the chat a direct link to the Slido polls, but also if you have your mobiles close to you, you can scan this QR code, or you can just simply go to slido.com and use this simple voting code 001122. And please keep this open, because we will be using this Slido session throughout the workshop today. But before we get to the first interactions, I just wanted to give you a quick recap about what the GAR is. First, by starting with the legal background. Don't worry, I didn't bring dozens of, let's say, legal slides, even though I could have, because altogether there are many different regulations specifying these kinds of disclosures. For us, what really matters is that there are two major, let's say, regulatory directions. One is the taxonomy regulation itself, which, as I guess most of you already know, that basically gives us the framework to define environmentally sustainable economic activities, and also creates obligations for companies, including financial institutions, to disclose their taxonomy alignment. So, and of course, the EU taxonomy altogether, I think it's a, let's say, disclosure-oriented regulation, but altogether this has the ultimate objective to support the EU Green Deal, the EU's environmental sustainability transition. Now, just like many regulations, it also has, of course, delegated acts, which let's say, explain or elaborate the detailed rules. One of the taxonomy delegated acts is what I call the Taxonomy Disclosures Delegated Act, which basically explains how entities, including financial institutions, should calculate and present their taxonomy-related information. And of course, I won't surprise you, GAR is one of those key taxonomy-related information to be disclosed for banks. The second big, let's say, area comes from prudential regulation, bank regulation. Again, many of you might be, of course, familiar with the capital requirements regulation, or CRR, which, of course, is a general prudential regulation. Capital requirements, liquidity regulations, but also disclosures. And one of the fairly recent new rules of the CRR is basically the Pillar 3, or disclosure requirements for environmental, social, and governance risks, or ESG risks. And again, we have here detailed rules, let's say, elaborated by the EBA about the Pillar 3 ESG disclosures. So altogether, this is the other direction from which we have disclosure rules, linking prudential reporting with sustainability transparency, helping investors and regulators to assess how green banks' balance sheets are. So that was just a quick legal background. And again, this slide might be a little bit scary, especially to those of you who don't work with these indicators. But I really want to just give you a very simplified picture about the main components of the green asset ratio. And this is the original GAR, which is in the current law in force. I will talk later about basically the plans to amend the GAR as part of this omnibus initiative. But this is basically the GAR which we have in place today. So it's a ratio which measures the financing granted to taxonomy-aligned activities. This is in the numerator. And the denominator is what we call the total covered assets. It's not exactly the total balance sheet, but almost the total balance sheet. So in the numerator, we will find when we are calculating the taxonomy aligned assets, and when I say assets, I mean debt securities, loans, equity mostly. We will have, for instance, loans extended to non-financial corporations, large non-financial corporations who are subject to the non-financial reporting directive or to the CSRD. So these are the large companies which really have sustainable disclosures. And of course, they also need to disclose their taxonomy alignment ratios as real economy firms. We also have among the potential taxonomy aligned assets, loans or maybe bonds issued by financial corporations. But even more important are households. Of course, for household, the two most important asset classes are let's say, home loans or home mortgages, home renovation loans. But of course, taxonomy acknowledges energy efficient financing, green building finance, so green mortgages. But we also have potentially vehicle loans. So when vehicle is green, which in the EU taxonomy means now basically electrified vehicles, these loans can also classify as taxonomy aligned loans. And for instance, there could also be, for instance, local government financing. So altogether in the numerator, we are collecting taxonomy aligned loans, debt securities, equity exposures. And the denominator is a little bit more tricky. And that's where some of the criticism of GAR comes from. I will talk about that later in detail. But here you might see that altogether the denominator is broader. So of course, this includes all the GAR aligned assets. So everything which is in the numerator is also in the denominator. But we are also, of course, covering the non-aligned assets. Again, loans extended to these kinds of counterparties which don't align with EU taxonomy. However, and this is again where the criticism comes from, banks also need to calculate into the total covered assets loans to, for instance, companies which are not subject to the non-financial reporting directive, like smaller companies loans, also interbank loans, derivatives, cash, everything. And very importantly, these can never qualify as taxonomy aligned. So that's why there is kind of an imbalance with the calculation of the GAR ratio. But I really won't want to bore you with all the technical details. Maybe just one more slide. And I guess the slides are circulated, so you can also check them for yourselves. This is one nice illustration from one big EU bank from its public report. Altogether, when banks calculate GAR, even though the indicator sounds maybe simple, altogether a lot of different asset exclusions and alignment criteria to be applied. So it's actually not so easy to calculate the green asset ratio. And as I will also show it later, there are also different variations of the GAR, like the GAR for the flow of loans, for the stock of loans, turnover-based GAR, CapEx-based GAR. So altogether, we are talking about a fairly complex indicator, even though it has a very nice and simple title, green asset ratio. But let's move to maybe more exciting things, and let's start with the first poll. I'm really curious about your estimations. What was the average GAR ratio of EU banks in 2024? And I mean the turnover-based GAR. It's just an estimation, of course, and it's a game. So please, even if you don't have an idea, please do vote, because I'm really curious also about your expectations. course, as I think EU citizens, we would probably say that, well, the higher the GAR, the better for the society. Let's have as many green loans as possible. But we can be certain that it's less than 100 because you've seen that the denominator is actually bigger than the numerator. Okay, nice. I already see that more than 20 of you voted. Great. Altogether, you seem to be less optimistic. Very few of you voted for the 69% GAR ratio, average GAR ratio. And most of you voted for the two smallest numbers, 7.9% and 3.1% what the most of the votes. And actually, this is also the true one. And so actually, that was the average turnover-based GAR ratio of EU banks in 2024. So less than 5% was this green asset ratio indicator. I will also a little bit like to discuss with you, okay, what do you think the reasons for that are? But maybe before we get that, I just wanted also to show you a snapshot from a public report of a large EU bank. It's not even a secret. This is Santander because it's shown in the on disclosure. So this is one snapshot from the taxonomy tables of this bank, and again you will see very similar tables from other large EU banks' disclosures. And as you can see, also Santander's turnover-based GAR was almost the same as the EU average 3%. The CapEx-based GAR, which basically calculates GAR using the, let's say, capital expenditure of clients as the basis, 3.28. And of course, there are a lot of footnotes and there are also other GAR tables. Just wanted to give you a flavor about how GAR looks like in a bank's report, because basically this is the kind of disclosure that clients, investors, NGOs, different stakeholders can read. Of course, supervisors, bank supervisors, central banks have these kind of indicators as reported data. They don't need to take a look at the disclosed files, but altogether, many stakeholders of the banks can take a look, assess, analyze, and make maybe informed decisions based on these disclosed green asset ratio disclosures. Also, just to a little bit extract the EU picture, the European Banking Authority now discloses the so-called ESG dashboard on its website. I guess many of you know it. If not, I really, again, encourage you to take a look at this ESG dashboard because there are some very nice visuals as well. And we can see from this EBA disclosure that there is, of course, fairly considerable, let's say, heterogeneity in the EU. So some EU countries and banks from some of the EU countries report very low GAR numbers. The total GAR is with light gray. The darker gray stands for the households, and the non-financial corporations are with the dark blue or black columns. So for instance, I come from Hungary. In Hungary, basically, the total GAR ratios were something like 1 or 2% of the reporting banks, while the non-financial corporations GAR ratio was a little bit better. And this was also the picture in other countries, like for instance, in Greece, the non-financial corporations GAR ratio was like 20%, but for households, much less. I think this is the usual pattern. There are some countries, like for instance, Norway, where the household GAR ratio is higher than the non-financial corporation. Probably there are a lot of green mortgages there on the balance sheet of banks. That would be my assumption. But altogether, on average, the GAR ratios are fairly small in Europe. At least that was the picture we had in 2024. But let's a little bit think about the potential reasons. And at first, again, I want to start with a poll, and then I will just a little bit open the floor to see if any of you would also have some questions here or comments. So what do you think, why do you think the average EU green asset ratio is so low? I gave you some answer options. Maybe many genuinely green activities do not qualify under the EU taxonomy. So maybe the EU taxonomy is already too strict. Or there are data gaps, lack of reliable information from clients, which limit what can be reported to banks and by banks. Or maybe the problem is that the GAR methodology excludes large parts of EU's bank portfolios, which I already mentioned to you. Or maybe the complexity of the do no significant harm and the minimum social safeguard criteria makes it very difficult to align or to prove alignment of economic activities. Or maybe you could say that EU taxonomy is still very new. We just have it for a couple of years. Banks and companies are still at early stages with implementation. Everybody is still learning the application of the EU taxonomy. Or maybe there is another reason. You can share that in the chat, or even better if you raise your hand and maybe share your opinion live. So I just wait a bit more until you can think. And actually, there are no right answers for this question. It is really an open-ended discussion question. I'm really curious about your thoughts. Okay, interesting, interesting. Views are really split. And I see that still votes are coming in. So the majority of you voted for data gaps. So actually, from clients, and of course, this could also be households, not just corporate clients. Banks just don't have sufficient, reliable, high-quality information, and that is maybe the most limiting factor and why the green asset ratios are so low. That's what this poll tells me, but also the other possible explanation got some votes. So let me just stop here for a second to see if any of you would like to add here any thoughts here, or if any of you have questions at this stage.
I put
Yeah,
my
we're-
question in the chat.
Oh, I'm sorry, I can't see now the chat because I'm now scrolling my screen. Could you please read out your question out loud?
Yes, so GAR was heavily criticized by the industry, and also the ECB was not very much keen on this. I know it's being reviewed and looked at. Is it here to stay? How much do we need to invest in this training, part of this training? Or is it just the matter of months that we will not look at it anymore?
That's a very candid question. Thank you very much. Yeah, actually, I would say, of course, nobody knows what comes out of these legislative processes, but the current plan is that GAR will stay with us. It will be significantly changed, but this will stay with us. So I would like to encourage all of you to believe in GAR. It's not a perfect indicator, but actually the new legislation is meant to correct its initial flaws. But I will talk about the, let's say, modification plans later. I mean, my short answer is that I expect that GAR will stay with us. Great, thank you for the question. Any other thoughts or questions now?
Right. I think just to read some of the answers on the chat, like Dana said that I think that's a mix of first, third, and fourth point to the chat, to the poll, and then Dimitra said that all of these factors. So
Great. And thank you very much, Chiara, for monitoring the chat, because now as I'm sharing my screen, I can't see that. So yes, please do tell me if you see any new developments on the chat. And I agree actually with all of these comments. Probably it's a mix of these factors. Right, let's move on. And I would like to explore with you, okay, now the GAR is being reformed. Actually, there was a lot of, let's say, work invested by, first of all, of course, the policymakers, the lawmakers, then by regulators to implement GAR, and then by banks to calculate and disclose the first GAR ratios, also by companies to report data to banks. Actually, a lot of work has been invested into the GAR. Now it's a time to reform the GAR, but in order to really make GAR meaningful, I think it's very useful to clarify why do we need such a KPI? What are the social functions of this KPI? Could it promote climate and environmental risk management? Could it help? Could it support the EU Green Deal? Could it maybe enhance transparency for investors and wholesale partners, like, for instance, wholesale creditors of banks? Could it maybe enhance transparency and comparisons for, let's say, retail clients, borrowers, depositors, and thereby have an impact on the EU economy? So I just brought here 4 different, I call them theories of change. So how the green asset ratio could influence the European Union's economy. And let's explore together how credible do we think these theories of changes are. How much do we believe that green asset ratios can support these kinds of objectives? And I would really like to, again, rely on your opinions also there. So I would like to go through these 4 potential functions. I call them economic functions. The first one is promoting environmental and climate risk management. So the question is if the green asset ratio calculation and disclosure can help here. So this is the theory. Well, first of all, green asset ratio will quantify banks' exposure to green versus non-green assets. And here, maybe we can assume that ceteris paribus, non-green assets might have higher transition risks compared to, let's say, taxonomy-aligned, very green assets. I guess most of you know that transition risk is one source of climate risk. So basically, this is the risk because of a client of an activity might become stranded because of the, let's say, climate or environmental transition. And then when banks disclose the GAR ratio, this will identify the higher risk areas where banks might be more vulnerable to transition risks. So maybe a bank has a very, very low GAR ratio for, I don't know, mortgages, which means that the mortgage book is very not really energy efficient, a lot of buildings which need modernization, a lot of buildings where the rental potential will drop, where basically the borrowers will have higher expenditures to pay the utilities. So again, these can signal risks, transition risks. And then we could argue that maybe banks will be motivated to reduce exposure to non-sustainable assets to avoid these kinds of transition risks. So altogether, the GAR disclosure will help banks comply in general with climate risk management regulations. So that would be basically the theory of change. But I'm really curious, how credible do you think that by this way green asset ratios could work? Here are the answer options. Yes, this could help sustainability risk management. It increases transparency and highlights transition risk exposure of banks. Or maybe you were saying, not really. GAR is too narrow to capture actual sustainability risk. It's not a good risk metric. Or you can also be even more negative. No, it's more of a reporting exercise than a real risk management tool. And it's also absolutely fine to say you are not sure. And again, no right or wrong answers. This is more like a discussion point. Interesting, interesting. Now the views are even more split. And altogether, if I say that the skeptical camp and the optimistic camp are almost equal, but altogether, most of you voted yes, it could increase the transparency and highlight transition risk exposure. I'm stopping again to see if any of you would like to a little bit share why you voted for some of the answer options, or if any of you have questions here. Would anybody maybe from the yes or the no camp basically share why you voted, how you voted?
Yes, Anike, we
Hmm?
have a we have a hand raised. Anike, please feel free to speak out.
Oh, thank you. Yes, I said not really, and then the car is too
Hmm?
narrow, because it depends a lot on the business model of the bank. So if it has a large portfolio of SMEs, I don't think it's very helpful. Well, if it's not the case and it's mainly EU-dominated loans, then it could be helpful. So that's why, and as I'm mainly focused on the smaller banks, that's why I choose this one. Thank you.
Thank you very much, and that's a very, very helpful insight as well. A lot depends really on the scope and also the business model of the bank, even the geographic scope of the bank. So in some cases, it could, but in others, maybe it's less helpful for supporting risk management. Thank you. I will just move on to the second possible, let's say, social function, support the EU Green Deal. Okay, so the GAR will measure how much a bank's portfolio aligns with the EU taxonomy. We already know that. So altogether, it helps us to track alignment with the EU's environmental objectives. And this tracking will highlight gaps where banks are not yet aligned with the EU sustainability goals. And maybe banks will compete in increasing green investments because we would like to improve their GAR ratios and also to align with the EU goals. This will encourage prioritization of green investments. And altogether, also at the level of societies, we will be able to track banks' progress in contributing to the EU's sustainability goals. So this theory of change suggests that maybe the economic function of GAR could be to support the EU Green Deal. But how likely do we find that one? Yes, option number one, yes, it can nudge banks to gradually increase the share of green activities. Or not really. GAR highlights gaps, but does not directly influence lending decisions. Or no, GAR is a good metric, or maybe even not so good metric, but banks won't compete in greenness. You could also argue that. You can also vote, I don't know. And of course, you can also have a different opinion. In that case, please raise your hand or share that in the chat. Okay, let's see. Interesting. Interesting. Again, my interpretation of the results is that altogether the skeptical party has the majority, but the relative majority went to the yes answer, so that maybe GAR ratios are small today, but gradually it might nudge banks to increase and improve their GAR ratios. Interesting. So does any of you would like to again speak up here and a little bit explain why you voted for yes or no or not really? Or of course, if any of you have questions, you can also ask questions. Okay, I don't see any hands or messages. So let's move on. Third theory of change. This is different. Enhanced transparency for investors and wholesale partners. So, according to the theory, we can say that the GAR will offer investors a very easy way to assess banks' greenness. So it's a clear sustainability metric for investors. And well, maybe we could argue that the ESG conscious investors, investors who prefer strong ESG characteristics, will more likely choose banks with higher GARs because these banks signal strong sustainability performance. Which means that banks with better GAR ratios can differentiate themselves. They can attract more capital. They can establish stronger market positions on capital markets. So this is actually a potential market competitiveness advantage. And of course, with investors and wholesale partners, we get to funding conditions when banks, for instance, issue green bonds themselves or simple unsecured bond financing, equity financing. Altogether, whoever is more popular among investors might enjoy better funding conditions, which is, of course, again, a potential competitive advantage for banks who perform better from a GAR perspective. So this theory of change focuses on wholesale funding and investors. But how much do you agree with this theory? And again, I brought you here 4 different answer options. There are 2 yes ideas. Yes, maybe investors need comparable sustainable metrics and GAR helps them allocate capital. Yes, higher GARs can strengthen investor confidence and improve funding terms. Not really. Investors rely on broader ESG data, not just the GAR, maybe on the ESG rating of banks. Or you could also argue that no, this function doesn't make sense because GAR is too narrow and technical. It won't really affect real investment decisions. This is not the way capital markets think and allocate capital. GAR wouldn't really play a role here. And I know that some of these answer options might not perfectly fit your opinion. So again, please feel free to, I don't know, express alternative opinion in the chat or by raising your hand. But if any of these are, let's say, ring the bell and you can agree more or less with them, then please vote on any of these answer options. Okay, interesting. Now I have to combine the, let's say, positive or optimistic votes and the skeptical votes. And it's very even, almost completely even. Yes, now there is like a, okay, the competition is going on. So altogether, again, short answer is that the answers are really split and the views are split. Some of you think that yes, this can help investors to allocate capital. This can be a good indicator for investors. But yes, many of you don't think that GAR will be used. And yes, let's not deny it. Investors have access to a lot of ESG metrics about banks. Banks actually are part of most of the large ESG rating agency databases, not just the ESG ratings, but altogether other ESG indicators are available. So I also can understand why you voted this way. So it's very even in the end. Again, I'm stopping, and please, if any of you would like to a little bit explain your votes, I'm really curious to hear your thoughts and votes, explanations. Yes, thank you. I see one hand is up.
Yeah, thank you. Well, this time I voted for the not really because for me, like the yes and the not really it's like more or less the same. Let's say that GAR is important, but there are so many metrics and for investors that not just the GAR. I mean, the GAR is important, but for investors having all the information.
Mhm.
So I'm from the yes side, but in this time, as the not really is written, I would say that it is not just the GAR, but also the other
Yeah,
information
okay.
provided, something like that. I would say yes, but not only. No,
Oh,
then
okay,
not
thanks.
really. So
Thanks.
that's why this time I voted for the not really instead of the yes, let's say.
Yes, actually, that's a very good point. Like the dividing, let's say, line or the border between the two answer options weren't that,
Yeah,
let's say,
yeah,
articulated. So thanks. I now
yeah.
understand why you're saying that. So GAR might be, if I understand you correctly, GAR might be an interesting metric, but certainly not the only one that investors can use. Mhm. Great, thank you very much. I don't see other hands at the moment. So let's go to the final one. So this will be a, say, a variation, but now we are not looking at wholesale investors, but rather retail clients, households, families, individual borrowers, depositors. So again, one possible theory of change is that GAR can also help retail clients to assess how green a bank's portfolio is. It's a clear sustainability uh, or very well understandable ratio, even though we understand that the calculating the ratio is very complex. But when it comes to just individual household borrower or depositor, well, green asset ratio, it's so telling. It's measures how green my bank is. So maybe it can enable better client choices for especially the most conscious ones. Responsible depositors, responsible borrowers, responsible clients will choose banks with higher GARs because they would like to see alignment with their sustainability values. I think many surveys show that, fortunately, in the EU, let's say the responsible consumers, when they go to the, I don't know, grocery, or they choose their transport methods, the responsible consumers share is growing in Europe. So why couldn't the share of responsible bank clients also grow? And maybe GAR helps there. And let's not forget that maybe the average household clients don't need to read the annual reports of banks. Maybe NGOs will help them. Maybe media will help them. These can amplify the importance of green practices, and maybe, and I will also even show you later, let's say, news clips when newspapers reported about EU banks' green asset ratios, even naming the banks with the specific GAR ratio. So maybe we could say that NGOs and media will actually increase these kinds of pressure from society on banks, which altogether would drive responsible banking because banks might want to respond to this client demand and from media pressures so that they increase their offering, sustainable finance offering, to attract also more responsible clients. So that's the theory. And again, I brought here 4 different ideas as possible options. Yes, some clients in Europe are becoming more sustainability focused and may prefer banks with higher GARs. Another yes option is yes, but mainly or only if NGOs and media raise awareness about GAR differences. Because you might not believe that, let's say, individual depositors would read bank reports. Not really. Most clients don't monitor bank sustainability metrics. It's not doesn't really play a role in their decisions. Or no, depositors in particular are unlikely to change banks based on the GAR. You could also argue that depositors are sticky. It's very uncomfortable to change your bank, especially if basically your only rationale would be that the GAR ratio is too small. So what do you think? I know it's a little bit similar to the previous question, but let's really think about society and households in this case. Okay. Interesting. I see that some votes are still coming in. So altogether, we are less optimistic here. So if I recall correctly, we were a little bit more optimistic about professional or wholesale investors who might, of course, have the capacity, the technical expertise, the resources to monitor banks. But here we are maybe less optimistic here, even though many of you say that, well, maybe NGOs and media could help really with awareness raising. Good. Let's again see if any of you would like to a little bit explain why you voted so, or if you didn't find any good voting options, then what would have been your answer?
If I may, I believe that so the decision might be also culturally driven. So there are certain countries that could look at the GAR for deciding to which bank they would like to lend their money, and so there are some countries that would weigh more the GAR, and others that actually would not pay that much attention to the sustainability metric.
Yeah, thank you very much. I agree with you. And great, I see two more hands. First is, sorry, I can't see you. Is it Rocco? I can't see your name, sorry.
It's Egle.
Sorry,
Egle,
yes.
Egle, please.
So I can give you my concrete example. I work in the climate change center at the ECB, and of course the climate change and nature degradation is at our core. So if now I would need to open a bank account, I would check it for this. Another example would be if I'm a company that needs financing from the bank, and I know that my project is towards the sustainability. I would, if I need to prioritize my search and start talking to the banks, I would start with one with the highest GAR, because I know that that bank is interested in this thing. So that could be also kind of starting point for me as a company, if I know for sure that I could offer them something.
Yeah, that's a good point. And also, like as you mentioned, maybe an entrepreneur like with a green project idea, then you are really very, let's say, picky. Okay, who is really the right partner for this kind of green project? I think that's a very good insight. Thank you, Christoph. If I read your name correctly.
Yeah, very good. I just because you also mentioned that it's people could be sticky, not changing too much around. And I think if they know about the GAR and if they have some background information and they follow the discussion, I could imagine that they are a little bit feeling confused and are not sure if that's what they are. If that's like driving you enough when there's so much confusion for them to set a decision on that. So that was just my thought.
Yeah, I agree with you. So actually, if you read and I will show you just in a minute some news clips. So, I mean, the news coverage of GAR issues isn't really so, let's say, encouraging. Like there is confusion, legal changes, omnibus, low GAR ratios. So, but maybe it's just like the fog of war, as they say, and in 1 or 2 years, we'll get to more clarity, and then GAR might be something that also more and more people know about. It's just a very new indicator. We just have 9 more minutes, and I would, sorry, one more hand is up. It's Dimitra. Yes.
Hello.
Please.
You ask our opinion, but actually, do you have in hand any data showing that, for example, retailers have moved from one bank with highest income to another one just because the GAR was higher? So are there any data to show us what are actually the trends?
No, I don't think we have data yet. GAR is really a very new indicator. We would really need some time, and also, let's say, the research always takes time. We need some track record. And being also a researcher myself, I think it would be very difficult to single out basically the reason why the client changed. So unless the client, let's say, openly expresses that I'm moving to another bank because the GAR ratio is too small with my previous bank, we would never know. We would just simply maybe see that some banks, maybe there could be some correlation. Banks with higher GAR ratios attract more clients. And then we could assume that maybe basically this is caused by the higher GAR ratios, but we would probably not know because it might be just simple correlation. But altogether, I think this will be an interesting research question for the future if we have more clarity on GAR, if GAR becomes stable, if we have like a track record of different years. We might have consumer surveys as well. So I haven't seen any consumer surveys, but empirically, you could ask the consumers themselves, maybe take a sample of, I don't know, 1,000 bank clients and ask their opinions. That would be fairly, I think, convincing, but I haven't seen such research yet. But that's a very nice research idea for the future. I agree with you. It would be nice to know. Thank you. So let me just conclude by, first of all, talking about the GAR reform, because this was already, let's say, raised by one of you in the beginning. So GAR wasn't perfect. We knew that. On the left-hand side, you can just see from the European Banking Federation their staff paper in early 2024. It's a very good publication, basically summarizing the conceptual problems with GAR, why it wasn't a perfect metric. And these are the common points of criticism. It doesn't capture, let's say, transition finance, or not properly. It's unbalanced because of the imbalance between the denominator and the numerator. Loans to SMEs and non-European clients are excluded. Data gaps, especially, for instance, real estate markets, access to EPC data, for instance, which would be key to calculate taxonomy alignment. Problems with the do no significant harm and minimum social safeguards. So a lot of criticism was raised by not just the European Banking Federation, but also by others. So that's why now we have on the agenda possible changes in GAR as part of the omnibus proposals. So the reforms would make the numerator and denominator more consistent by removing out of scope entities from both sides of the calculation. So GAR would be better aligned with the CSRD reporting, which is, I think, good news for many banks because this was the most important criticism by banks. However, let's not forget, and maybe you are following the news about the omnibus process, is that now the scope of the EU taxonomy reporting together with the CSRD reporting would be really narrowed. And according to the latest EU Parliament vote, just really very large EU companies, maybe with more than 1,750 employees, would report EU taxonomy data, and especially if they have like substantial EU taxonomy turnover or capex, let's say, business share, which basically means that GAR will be simplified. Banks will have it easier time to calculate and report the GAR ratios. Maybe the GAR ratios will also improve just because it won't be so imbalanced, but there will be also a big scope reduction. So less companies' data would be captured in GAR ratios. So altogether, GARs would be less representative of the total EU green finance market. So it will be a better indicator, but more accurate, but it would basically just say a story about a smaller part of the EU taxonomy because of the reduced scope of taxonomy reporting. So altogether, the news are mixed. I maybe want, I'll just drop this poll in the interest of time. Altogether, I think there are reasons to be, okay, some of you are voting. So it's a mixed change indeed. I agree with your voter. It improves consistency, but also reduces data availability. And let's not forget that this is still ongoing. We don't know what comes out of the legislative process, but altogether GAR won't stay the same. That's what we know from the ongoing regulatory discussions. And this is my final slide. So first of all, I talked about media. This is a news clip from Bloomberg from last year. Even at that time, media, of course, reported about GAR ratios. As you can see, bank by bank, so not just average ratios, ABN AMRO, ING, Danske, Deutsche. And of course, it says only 3%, so it's a little bit like a critical news, even though, of course, Bloomberg acknowledges that it's a faulty new metric. But altogether, this is in the news. Of course, you could argue that Bloomberg is mostly read by professional investors and clients, but it's happening. And I think also in the future, financial magazines should, let's say, analyze GAR ratios. On the right-hand side, you can see a news clip from the Banker magazine, and this is from NGOs. So maybe many of you know, for instance, Reclaim Finance or BankTrack. These are well-known NGOs. And they've been not only, of course, complaining that GAR ratios are so small, but they were even advocating for new metrics. For instance, they were advocating for a new metric, which would basically let's say, clean energy to fossil fuel energy finance metric. So comparing how much bank lends to clean energy project compared to fossil fuel based energy project. And they even said that there should really be a big European campaign and banks should reach 6-to-1, let's say, ratio for clean against fossil fuel financing by 2030. So why I showed it, actually, NGOs can really amplify these kinds of sustainability metrics and exercise some pressure on banks to improve their green financing. This is my final slide. I know I'm almost out of time, but if any of you have other questions or comments, please do share it.
Yes, from our end, yes. Please like to ask our participants to raise your hands or even speak directly to our speaker this morning. Should you have any further questions? Okay, from Anike, like she shared on the chat, the Omnibus saga continues. EU Parliament revised final position on CSRD and CSDDD. So, right, Anike, would you like to expound on the link that you shared?
Sure, of course. I think it provides a helpful overview of the recent votes in the EU Parliament and the next steps for the regulatory legal process.
Yeah, thank you very much. Actually, the most important change is really like this substantial, let's say, narrowing of the scope of firms under the CSRD and CSDDD. So that's the most recent development. Thanks for sharing that into the chat. I really encourage you to take a quick look at that article. This is still ongoing, of course.
Right. Okay, just to have a brief recap as well of what we will be supposed to do in the next coming weeks. Before we close the session, we would have next week on the 27th of November, Linda Zelina, who will be presenting the EU taxonomy applied to the real estate sector. Georgia and I will be reaching out sometime this week for the case study, because we will the difference between this session and next session. For next session, we will be having group work or a group activity. So please stay tuned for further communications regarding the case study for live class module 5 under module 5. Right. So I think it's 12:01. Georgia, would you like to formally close the session?
Yeah, thank you very much, Chiara. As she said, see you everyone next week, or if not everyone, the majority of you. I hope you enjoyed the session. Thank you very much, Gabor, once again for coming here and for accepting us and the invitation. And thank you very much, everyone. Have a nice lunch break.
Thank you very much.
Thank you.
Thank you.
Thank you, everybody.
Thank you.
Bye
Super
bye.
interesting.
Bye-bye.
Thank
Have a
you.
nice day.
Bye.
Bye-bye.
Thank you.